This is the last edition of January. We're almost at the end of the first month. As you get older, like me, time flies tremendously. So today is Monday, January 29th, and we're going to cover the Japan FinTech Observer for the week ending January 28th. As always, we'll try to pick three topics that we want to dive a little bit deeper into rather than reading through the newsletter itself. And so, what we got in store for you this week is once, let's take a deeper look at the Rakuten Debt issue. We've been talking about this and highlighting that throughout the last year because we felt the liquidity situation is pretty tight and is sailing very close to the wind. Second is, given that we had some news last week on regional banks, we're going to talk about that a bit further. And we also have now the full numbers in for the 23 calendar year. And so we're able to talk about some of the metrics around venture capital, especially in the SaaS, software as a service segment for Japan, and then compare it with the US, for example. Before we start, though, just a very quick recap. We had the January monetary policy meeting by the Bank of Japan last Monday and Tuesday. As expected, and as the economists that we follow expected, there wasn't a change in the bias. There was a slight change in the wording where they said that it's becoming increasingly likely that we reach the level of inflation that we want to on a sustainable level. But the next MPM is in March, but that comes without an economic outlook document. The next one with an outlook is in April, by which time then also the wage negotiations have been done, and we know at least what the theoretical numbers are. How they then translate into the actual salary and wage increases remains to be seen, especially on the services side. I think the economists, again, that we follow think that a second half adjustment is most likely, and it could be as early as June, so the bid offer is somewhere between June and October at this point. You've seen the stock market last week kicked off fantastic. We hit a new post-bubble high at the end of Monday, intraday Tuesday even higher, but then downhill for the rest of the week, and ended up 0.5% lower on the topics for the week. Jan was pretty stable, even around the announcement by the BOJ, maybe a 1 yen fluctuation, which wasn't really much, so no surprises there. And then the big news on the sanction side, Sompo Japan and Sompo Holding, so as an oversight entity, the holding company as well, got business improvement orders by the FSA. Those are ugly beasts. The good news for Mizuho, at least, the same week, was that they finally got their business improvement order lifted after about 2 years, I would say. So they had trouble throughout 22, started in February and ended somewhere in October. And certainly the FSA was coming in during that process, but then the business improvement order itself probably came a bit later. So 2+ years under the business improvement order. And for them now, actually, it's a time that they will start their core system renovation because they had to do all these fixes that they had agreed to with the FSA. So it goes back to business as usual, but that means not they can rest. Now they can actually do some new business again. And that probably looks somewhat similar on the Sompo side, where they've also been highlighted for cultural deficiencies. That's probably the right word, cultural deficiencies, which is a much harder, so it's a conduct question, much harder to fix than some very specific system issues. That was the preamble to this newsletter. You can read the rest yourself, and if you have trouble finding it, then just go to my LinkedIn profile and there shouldn't be a problem. Let us take a look at Rakuten Debt then. All the debt essentially was taken up to build the hardware, to build the tower installations for the 5G network. And it's been adding up quite substantially. And so now 24 into early 25 is a bit the moment of truth where quite a lot of this debt is coming due, either as bonds or as notes. And you see here, the total of that is over 4 billion US dollars. Those are the near-term expiries. The longest dated Rakuten bond matures only in December 2036. And if you consider longer maturity means higher reaction to a change in interest rates, these bonds were trading under 50 cents to the dollar, or 50 yen to the yen, if you want to put it this way. And I've recovered a bit. They are at 58% or so at the moment. But if you're holding these instruments, then you're getting a bit nervous. And part of that is clearly the credit quality, but the other is you're sitting on pretty long-term bonds for interest rate environment that's still expected to change somewhat this year. What Rakuten has done and why we're talking about this is in order to raise financing. Last year they sold off parts of Rakuten Securities in two tranches. They sold whatever 20+% stake to Mizuho and then decided they would up it to 49%. And they had also listed prior to that already Rakuten Bank, about 20% of the holdings as well, on the Tokyo Stock Exchange to raise funds. And so what's happening now is that they're essentially trying to get ahead of these November dates, the US dollar denominated bonds. November 24 is an interesting maturity date because we, of course, have US election and nobody really knows what the market environment will be there. So I think they're doing a prudent thing and swapping these against notes that go 3 years out into 2027. Right, and that's really where nothing changes as such. So they still have the same debt load, like kicking the proverbial can down the road. And this is a graphic from the Nikkei last week where we see these $1 billion, right? What's this in 15 trillion yen? Is this right? Basically get moved into 27, nothing else changes. But also this move is not free of charge. So the tender offer that they put out has a 3% early termination fee. And so if you were to give it back at 100, the bonds, keep it easy, keep it simple, then you would get 103. The paying 3% to retire the bonds early, and they're probably paying about as much to issue the new notes, which on $1 billion comes out to somewhere $50-60 million for managing the maturity of your debt. Right? And we talked about this, selling the family silver. So you have this wonderful Rakuten ecosystem with all the points, and you don't want to break this down. So in the end, Rakuten kept 51% of Rakuten Securities, sold 49% to Mizuho Securities, and there was some fluffy language around these two also cooperating on banking service of some kind for these Rakuten Securities customers, which is right a bit odd. Of course, you have Rakuten Bank there, and it also leads us to take another look at Mizuho because Mizuho has some interesting plays. So since 2017 for Mizuho, they've been working with SoftBank and had invested in PayPay Securities. which had become a joint venture entity in the June of 2020. And also here for tighter integration between PayPay, the payment app, and PayPay Securities, which really at that point was a SoftBank and Mizuho-owned entity. There was additional stock issuance to pay about a year ago. And so it's still a fully consolidated entity for SoftBank. Presumably they have the management control, although they no longer hold their large owner of Pay. So in the end, they might still hold quite a bit of this stock. Mizuho owns now 49% of Rakuten Securities, where they want to give a face-to-face service for the online Rakuten Securities customers. They have, of course, Mizuho Securities, and then they own 34% of PayPay Securities. So that's quite a bundle to manage. And that in an environment where the big ones is Rakuten Securities and then SBI Securities, started in November of 23, offering zero-fee trading for Japanese domestic securities. How much money you can make will be an interesting arena to watch, and it's certainly been one that when we looked ahead into 23, something we completely missed. Honestly, I think many people missed it because nobody expected the stock rally that we got for the Nikkei and the topics. And with that, there were in the pipeline quite a number of players, both startups and global franchises that started opening up their business here in Japan after possibly also having acquired the Japanese traditional brokerage and its license even before that in 22 or 21. So a very competitive market. And as Japan is also the largest retail FX trading market, it is rather thin margins, super competitive. It is clear that brokerage is moving into the same space, right? Oki Matsumoto, who's founder of Monex Group, certainly had the timing right when he sold the management control for Monex Securities, a Japan entity, to NTT Docomo last year. Smart move. Smart guy, smart move. Let's take a look at regional banks. We haven't talked about that for a while. The last time we've written about this on our blog was in 2020. And even then, we were using this graphic from the FSA study they did in 2018, basically looking at the revenue pool in each prefecture in terms of lending and deposit taking, right? What revenue can be generated in a prefecture? What is the typical expense rate for banks? So how many banks can a prefecture support? And we have 47 prefectures. 23 of them cannot even support a single bank based on that study 2018, right? We have not updated this. But since then, we've got even longer period of negative interest rates, and the banks have problems generating income, so they haven't necessarily done better. So, and if take a look at the FSA website, you can extract spreadsheets of all the license holders for the various licenses. And as of today, there are still exactly 100 regional banks listed. We'll talk about some contracts in a moment. Not all of them, although they are standalone on that spreadsheet, might be standalone in terms of how they're actually being managed, but there are still 100 regional banks. Two categories, if you add them up, it's 63 in one and 37 in the other. That's the situation we're in. The reason we're talking about this today is news from last week that Fidea Holdings, which is the holding company for Shonai Bank and Hokuto Bank, they are in line with the FSA Aomori and Yamagata and Akita, up in Tohoku, the north of Honshu. This holding company was created in 2009, and then they've made certain changes along the way. So this is one model of what people have tried to do, create a holding company. And because we can't generate more revenue and the outlook is bleak in the negative rate environment, we're going to cut cost. And so we're going to share administrative expenses, we share system development expenses, we share ATM cost, etc. Ultimately, in 2018, sounds a bit iffy, but they also created a group headquarters. That means they still had two prior to 2018. But now last week, they came out and said that they're actually creating a preparatory committee to completely merge and become one entity. And that would be the first cross-prefecture bank in Tohoku in the north. Certainly interesting move, and in a way it's still cost driven, right? Cutting costs, taking costs out, taking expenses out. There isn't much in there that says, oh, we're going to find new revenue streams. There are others who are doing that. One model is SBI Holdings, which originally and still has this image of creating the fourth big banking group, right, next to SMBC, MUFG, and Mizuho. And the original approach, going back to 2019, was a roll-up of these big regional banks into a holding entity, and then through that create the next entity. That all has changed with the Shinsei acquisition, right? They've also taken on one of the big three banks as a major shareholder. So it doesn't seem there's a total focus on the strategy anymore, but also through the roll-up, clearly the same story again of having shared core banking systems and being able to take out costs, etc. We shall see. I think more of the focus, on the one side, more of the focus is on, of course, making SBI, Shinsei Bank profitable and functioning well, operating well. On the other hand, it also gives an additional platform, especially on the corporate side, the corporate products that SBI Shinsei Bank has, rolling them out into these regional banks as well. So there's certainly synergies. And if you add it all up, then you certainly have the fourth large banking group in that. So the alternative to all of this is, of course, look around you and see, can we do something interesting that allows us to generate new revenue? And there are few players now in the banking as a service space. So Minano Ginko is the digital bank of Fukuoka Financial Group, which is very similar, right, to the video that we've just seen. So it's also a holding company with several banks underneath, but they've also built from scratch, together with Accenture, a digital bank. And I think maybe somewhat optimistically also said they would want to go into the international market to monetize that investment and basically offer it as a digital banking platform, new core system. Now, there are quite a few players in that space, so that might not have been the most successful or revenue generating activity, but they do have quite a few branches on the platform. And so when you do transfers in Japan, you have a number for the bank and then you have a number for the branch. And these banking as a service entities are then set up with Minano Ginko as the bank and a specific code for the offering. So here for Pixiv, you get a Pixiv branch and everything can be co-branded Pixiv is a manga service, so you can read mangas on your mobile phone, etc. Now you can also pay with this. And Mina no Ginko obviously has the objective to generate more accounts on the platform, because you get paid a basic fee for each account, and then they split transaction fees with the branch here in some shape or form. Right. And if you look at their website, there are 5 or 6 or so at the moment. So say they've been somewhat successful with that. Closer to Tokyo is Kiraboshi Bank, which is in Chiba. They similarly created a digital bank that's called UI Bank. They use the core system that comes from Shinhan Financial in Korea. They use that in their emerging regional markets like Vietnam, etc. So it's a low-cost solution. So they didn't build from scratch. They went with that, and they also start serving banking as a service customers as well. So you can generate new revenue through that. Right there, the concerns around all the legal and regulatory side for all these banking as a service providers in the US right now, and the spotlight is shown on how it's being handled. So we'll see how this plays out here in Japan. Being a somewhat late adopter in this space, obviously the regulator is also observing what's happening in the US there currently, and hopefully they're not going to make the same mistakes. And it seems a much more measured pace here. So that's good for sure. As the regional banking space will stay very interesting. I want to take a quick look at this as a third topic, a few of the venture capital metrics, given that we're at the end of 23. Obviously, people had time to sift through the data somewhat. All the funding that might still have happened late in 23 is in the books. It was always interesting here from Shizen Capital. They make a pretty rigorous count. So they're saying we're only taking new investments of Japan's independent venture capital funds. So that means no CVC, I guess that's my interpretation. And also only into domestic startups. Only when you're leading, and only if you not investing into an additional round for one of your portfolio companies already. I think was the same as saying new investments. Right? New investments means it's not already a portfolio company. It's interesting, of course, the filter, but they've done it now for a couple of years. The filter certainly is aligned with their investment thesis. So you see Shizen Capital here in the center, 10 plus deals that match this filter. Then the Shizen Capital Global Brain. I can't read the small print. I apologize. So you might have to zoom in on that as well. Global Brain is an interesting beast for sure, because they run at this point probably 10-ish or so funds for corporates, right? So they also run Sony Bank's venture fund, for example. So somebody must have gone through this data in some amount of detail to figure out what's going on. And the reason that is important, certainly from a perspective of domestic startups, simply is that there is a very long list of venture capital funds and entities and venture capital firms that has been collated, and that is freely available when you Google it. The question is, as a foreigner, right, is there a track record also of these companies investing in foreign founders in Japan. That's certainly a landscape that's changing as well. Here, at least, you have a filter already on domestic ones, so players that have been founded in Japan, and some of them will also have founded foreign founders. It's just a good reference list to keep. The other that we like a lot is One Capital. They are SaaS specialists. So the founder is a former partner of Salesforce Venture here in Japan who went and created One Capital, his own firm. And they've been investing in Japanese SaaS companies. So they also built a SaaS index of publicly listed companies, so you can follow that. And it's been quite successful. It's been super successful, right? During the pandemic, if you look at 21 as a year and 22, valuations were through the roof. Those have come down, and we'll take a closer look at that in a moment. What is notable on this chart, the blue line is the number of deals. So if you look at 23 versus 22, the number of deals has increased significantly. So that's about 50% more. At the same time, the total money raised in the SaaS space has gone down about a third, right? And so that means it's in total that the average deal size has become much smaller. That essentially goes hand in hand also with the observation in the market, right? If you look at valuations and general funding across all startups, it was pretty difficult to get late stage funding last year. But because the rounds are still smaller and right, there's more upside, seed, pre-seed, maybe even also Series A got still funded. Series C and D had a tough time, and those valuations have come down quite substantially. So there can be one reason. The second reason, of course, that people here like to hear here in Japan is that you've got a budding startup ecosystem, right? And you've got many more startups that have been created over the last, let's be generous, 2 or 3 years. Although like the 5-year startup plan is only, it's already a year and a few months old, right? So that came out in late 22, if I'm correct. So the second interpretation simply is that we have many more startups that get funding, which would be right, a great view into the future, because some of them certainly will survive and go and do great things, and we'll hear from them and about them much more in the future. So it's maybe a bit of both. I think the Nikkei today also had a headline saying that the funding capacity, and that doesn't mean the extra funding, but the funding capacity, so funds raised for the Japanese startup ecosystem, is at a record high. I think which again goes hand in hand, the correlations also with the stock market. So Japan certainly has gotten lots of attention. Some of that is simply outflows from China that had to go somewhere, but there's also been some good selling done by various people around the Japan story. And some people give some credit to the TSE, what they've done in getting some movement into the capital side and capital management side of their listed companies. So all of that's pretty good. I think the next one, we want to take a look at the revenue multiple, sales multiple for these companies. Right, and you see the peak there in 2021, and then it came down quite substantially. For the duration of the index that One Capital has created, they're still mightily outperforming the Nikkei and the Topics by 3x, 4x or more. There was probably 8 or 9x during the pandemic where you see these valuation highs. But let's say the pre-pandemic median that they marked here in the blue line was basically an enterprise value of 10 times sales. And now we're like at 4.5. It's been creeping up a bit. But it's also, again, if you're talking about SaaS and private markets, then this would be a bit lagging the public markets. But if you also look at it from a public perspective, what is investable, maybe if you're not an angel or private equity venture capitalist, then you would hope to some extent that this valuation goes back to the mean, which would essentially be a doubling in the valuation from 4.5x multiple on sales to 10. Now, is that realistic? We'll see, maybe somewhere in the middle, right? Simply, we've taken a look at the US market, and there's a similar slide from Avantis Advisors. And you see here similar movements, 2021, peak valuation, sales multiples, and that's come down. Right, too, it looks like if you take the same period, 2018, it's probably slightly lower than that still too, but much closer to what it used to be. Maybe it was around 10 there as well, and now it's at 7.5. So it has also not caught up there. So the valuations similarly are a bit depressed, which is right surprising when you look at the performance of the Nasdaq, for example. Nobody would think that technology is undervalued in the US as well. But again, I think nobody necessarily knows how these companies are going to adjust in the new shape of AI, and everybody's betting on the clear AI winners at the moment, and maybe being a bit more careful on everything else. There's certainly lots of change coming, but it's still SaaS as a market, as an investment thesis. It's still super hot because clearly, right, the capital intensity is low. The proof of product market fit is quick compared to some of the stuff that Japan is really good at, the hardware engineering, bioengineering, and these things that just take a much higher investment, but maybe have a longer runtime or a bigger moat than to defend it as well. These were the 3 points, 3 deeper dives for this week. I hope this was helpful. We also tried out a new time, 7 p.m. on Monday. Gives me less time to write the report, but maybe it's good for my self-discipline. We'll try to do this again here next week, 7 p.m. on Monday, and see how it goes. Keep up the good work, and I'll see you again next week. Thank you very much.